Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. Looking forward to the week ahead, we have Nvidia down in the pre-market, showing signs that tech may be ready to take a breather after holding the market up for the past 6 months. We're coming into this week with a few more companies in the S&P 500 above their 50 and 200-day averages, but no major changes in that regard last week. So far this year, every new all-time high in the market has been with less stocks above their medium and long-term averages. That's a major divergence in performance when comparing the largest companies in the index with everybody else. The only question that matters over the next 6 months is, will the rest of the market be joining this rally, or is it time for us to tame our expectations looking forward? The S&P 500 and the Russell 2000 look set to open the day above the weekly pivot, with the NASDAQ 100 set to open below. This is most certainly a short-term change of character for the NASDAQ, but all indexes remain above their medium-term monthly pivot. Following options expiration on Friday, we took another look at the S&P 500 and mapped out the projected range for SPY, and according to the VIX, it looks like we're in for a little more volatility than usual over the next 21 days. Options flow still suggests that the market is bullish on large caps and bearish on small caps. The projected trading range over the next 21 days for SPY is between 565 and 525. I think the PCE numbers on Friday could really help with determining which of these targets is more realistic for our outlook. We also have some big reports coming out this Thursday, with durable goods set to give us an idea of what business spending looks like. GDP projections are projected to fall back to 1.3%, and corporate profits are projected to fall back into the negative. I'm also going to be watching the 4-week average for jobless claims and how the market responds to any surprises there, considering we expect a slowing in economic growth. On this week's earnings calendar, we have FedEx, Micron, Nike, General Mills, and Walgreens all reporting between Tuesday and Thursday. Micron should give us a fresh look at what's going on in the semiconductor industry, while Nike and General Mills give us an idea of what we're seeing from the consumer side of the economy. Consumer spending makes up roughly 2/3 of GDP, so any changes there can have a major impact on the future outlook for the economy. I'm expecting a range between 550 and 540 on the SPY ahead of this week's major reports, with a breakout of the range toward 555 or 530 after. I'm more inclined to lean toward the bottom end of the range this week, but if these reports rekindle hopes of larger than expected rate cuts this year, I could definitely see a breakout toward the high end of the monthly projections. The market breadth has gotten weaker even with the AI narrative driving gains, so I am not sure what could make things better at this point. A smaller number of companies have held the market up, and now we could be about to witness what that looks like when the influence shifts in the opposite direction. Despite the drawdown from highs being minimal to close out last week, we still need to have a strong performance this week to turn things around. I would advise not being committed to any upside moves unless you see extremely strong volume with it. I would also wait to see previous resistance at 548 on SPY tested as support before taking any moves higher, as a sign that we're heading towards the upper levels of the monthly projections. The Equity Channel is one of the most followed stock market podcasts for beginners, a valuable resource for investors who are looking for information on the stock market and the economy. We love to make our episodes quick, straight to the point, and rich in value. We hope that's what you got today. Be sure that you subscribe, turn on your notifications, because every time we drop a new episode, money is made.